Hi, this is James Shug with Westpac London's end of day report for Monday, the 8th of April. We saw a bit of a bounce in, European equities earlier in the session, but it seems to have faded away heading into the close. The data flow today was not particularly favourable. We saw the Centix Investor Confidence Survey for April. It fell further for the second month running from minus 10.6 to minus 17.3 in the April reading. That was right at the low end of forecasts. Basically the profile for Centix looks just like it did last year when there was a post LTRO burst of optimism that fairly quickly faded as the year progressed once the deteriorating European outlook and particularly the attack on Spanish and Italian bond markets took hold. This year, the post-ECB OMT optimism seems to be fading now following Cyprus, Italian politics, Slovenia and other developments that I'll mention in a minute. Well, I'll mention now actually. Portugal is potentially going to be requiring a second bailout. Early days yet, but the Constitutional Court there rejected the plan to suspend pay to public servants and public sector pensioners for a month. So they're going to have to come up with fresh spending cuts to make up the hole. In the meantime, the latest bailout tranche has been delayed, so the 2 billion euros has been held up. And the troika of ECB, EU and IMF officials are apparently going to Portugal at some point soon to review the situation. Remember, of course, the Greek bailout's been held up because of the Greek government's failure to sack enough public sector workers, and Slovenia is increasingly seen as the sixth candidate for a bailout in Europe, with its new government struggling under the weight of increased funding costs and a banking sector that's saddled with a 20% impaired loan proportion. So European developments haven't been particularly favourable today. We had German industrial production. Yes, it rose 0.5% in February, but back revisions meant that, that all that did was basically hold IP at around the low point for last year, after January was revised from flat to a down 0.6%. Industrial production is down 1.8% over the year in Germany, and it's going to struggle, Germany, to post enough growth in the first quarter, enough of a bounce after its 0.6% contraction in GDP in the fourth quarter. Germany will struggle to offset weakness in other parts of Europe, so it looks like the Eurozone will be posting its sixth consecutive quarter of recession when figures come out in May. No US data today. We do get the US earnings season kicking off tonight with our COA. In Canada there were two quarterly surveys there, one on credit tightening or credit conditions, which showed a very slight easing in credit conditions, another showing improvement in the outlook for sales for business. And that's about it in terms of events today. At the European close, the London market was up 0.4%. Many in London, of course, mourning the passing of Margaret Thatcher today. The French market pretty much flat, the Germans flat, Spain down, but close to flat, just down 0.1%, and Italy flat as well. Actually, they're all flat, really, just either up or down 0.1% or less, and except for the UK market up 0.4%. And the Dow at the moment is down 0.4% in the US. Okay, so that's it for stocks. On the equity markets, on the commodity markets, we've got gold prices down 1/3% at $1,570 an ounce. Oil's unchanged at $92.69 a barrel, and copper prices are posting a 0.6% gain. The Aussie dollar's just under 1.04 against the US dollar. Around lunchtime today, London time, it was around 1.043, but it's pulled back about 1/3% since then. Our colleagues at NAB will be putting out their business survey for Australia on Tuesday, and that's it for me today. I'll be back again tomorrow.